Good afternoon, everybody, and it is afternoon for me because I am on Central Time this week, so it is 5 p.m. where I'm at. Welcome to the October 13th start of the week review for the Forex Trading Room at Special Effects Academy. As usual, we'll go through our regular agenda. Take a look at the prior week's results, and they were a little bit brutal. Take a look at our currency strength meter, fundamental announcements scheduled, a look at the major pairs on the daily, any setups we see in progress, and as usual, a few words in conclusion. Let's start with the ledgers. Long-term ledger, not a lot of change. We got taken out of the pound Swiss trade at a loss when the pound reversed course, and we'll take a look at that when we look at the charts and see about some explanations as well as what path we can expect going forward. We did open a couple, well, we opened one trade this week, but we had a trade from last week, the USD CAD, that has really come into its own and is now carrying significant profits. So even though we took a loss, the account is pretty much unchanged since the profits from the USD CAD are covering what was lost from the pound Swiss. Of course, these are open profits, so nothing is set in stone until we actually close out the trades. The intermediate term account was the one that took the biggest hit. We're down a little bit over 10% on closed trades. Again, the market shifted very drastically this week. The euro went in the opposite direction, so did the pound. So we weren't trading the pound on this account, but the euro definitely gave us quite a few losses throughout. As I said, a little bit more than 10%. This is normal. We're not going to be winning every week, and sometimes there will be pullbacks. And as you can see, the account is still nicely positive, so not a big deal. We also have some trades still open, and the CAD in particular is moving in the right direction. So if that continues, we'll probably be catching some profit on the open CAD trades. And of course, we will be opening more trades as warranted as soon as we see any valid triggers. And the short term, curiously enough, didn't take that big of a hit. We started out pretty rough, taking 5 losses in a row, all of them around the 50 pip level. And then we had a fundy on Friday with the Canadian labor report, and that went pretty well. So we actually picked up about 200 pips on those 3 trades on the final day of the week. And while that did not push us into profit for the week, it was a pretty small loss. So we're down about 2% for the week on the trades taken. So all in all, not as bad as it could have been. The Canadian definitely saved or pulled our bacon from the fire, I should say. So those were the results for the week. Notes and opportunity for improvement. As I said, there was a brutal market move midweek, and it did take us out of some trades that had been looking quite nice, especially on the intermediate. Again, this is just unavoidable. If you don't take any risks, you're not going to be making any profits, so this should be expected. Then every now and then we will have a little bit of a drawdown. As I said at the beginning, we were also overdue for a drawdown. We've been quite profitable on the intermediates. And indeed, we're still holding on to steep gains. The long term is starting to look promising, and we will be adding, or at least I expect to be adding, quite a few trades on the long term as the market seems poised now for some very interesting moves. The pound, it bears keeping a close eye on this week. There might be a big retracement opportunity on the slightest hint of bad news. And of course, we are going to be looking at that a little bit closer when we look at the charts. Relative strength meter for the last 30 days and the last week. On the last 30 days, we can see that volatility for the month is actually pretty low. We're back to the mid 2% range on volatility. Aussie has been the clear loser, followed by the Swiss franc for the month. The Canadian, the pound have been the winners overall. And most of the movement from the pound, again, was pretty much last week. Last couple of weeks have been really good, but last week was fantastic for the pound. Euro, JPY, dollar have been pretty much mid-range. They've gained against a few currencies, lost against others. And I would say that the metals are still looking good for the monthly. Silver, of course, has been the biggest winner, followed very closely by gold. For the week that just ended, volatility was a significantly higher than what we've seen for the month. You can see how dark blue that column for the pound is, and most of that movement was in the final 2 days of last week. The yen was a clear loser. Aussie was a winner. Kiwi was a winner. The metals didn't fare too well for the week. Silver pretty much middle of the road. Gold lost some ground. Again, not a whole lot. We can see that the deeper colors on those red columns come from the pound. The pound was the big mover. The yen was, of course, the big loser. So the yen for the week did end up significantly below where it had been, giving up some of its gains, but still looking pretty strong. And again, we'll look at that more closely when we shift to the charts. For our fundamental announcements, a pretty light week. We do have a lot of high impact announcements coming out, earnings, unemployment rates out of the UK, and I may trade that unemployment numbers. It is at 3:30, which is still my my waking time, so I'll decide that later in the week. But right now, the ones we are definitely going to be trading are the Reserve Bank of Australia meeting minutes tomorrow, Monday, at 7:30 p.m. U.S. Eastern Time. And I'll have to verify that that is the exact time because the Australians and the calendar just don't seem to mesh too well. But we will be trading that one. Tomorrow is a holiday here in the U.S. It is, what is it, Columbus Day? It's Columbus Day, so well, we normally don't have a 2 p.m. session anyway, so obviously that would be a given. We won't. And the 8 p.m. session, I was pretty much set on not having it, but we will be trading the RBA meeting minutes, so that will dovetail with the 8 p.m. And again, I'll verify that time just to make sure we're not in for any surprises from the RBA. And then on Wednesday, we have the unemployment and employment numbers coming out of Australia as well, also at what looks to be 7:30 p.m. So we will be trading that one as well. And as I said, I'll verify these times and make sure the calendar is up to date. But those are the only two I plan on trading, and perhaps I will add the unemployment rate out of the UK on Tuesday morning to that as well. And with that, we're going to jump into the charts. The euro was, again, the euro was a big mover last week, and this did take us out of multiple trades that had at some point even been carrying a small amount of profit. But the retracement on Thursday, Friday took us out. We can see that the euro dollar bounced off the top of its long running channel. In fact, it is sort of making a channel above the channel, and it is at its high point facing the resistance of the Ichimoku cloud. We'll be keeping a close eye on the euro pairs as well, as there may be some opportunity for retracements this week, or even for continuations, but probably more suited to the short-term account than anything else, but still we'll be keeping an eye on those to see which way the wind is blowing. Pound dollar, the pound, of course, was the big mover last week, and it's gone all the way back up to prior levels of resistance. Around the 108.50, I'm going to say, is where it ended the week. And as I pointed out in one of the earlier charts, unless there is continued good news, and that's not a given, we may see some really good opportunities to trade this all the way back down to the 106.50 or thereabouts. That a little bit, well, within the Ichimoku cloud, I should say. But we do have a line of support drawn at the 106.75. I think that would be a pretty good target. And, well, we may be able to make back a lot of what was given up last week if we see that movement. I'm not going to be jumping in long on the pound just yet. There's a lot of things that need to happen on a fundamental level for me to believe that the that we're going to have this moving in the opposite direction, but we'll see. USD, oh, and I see I had the wrong chart, but it looks so similar that, let me see. Let me pause this 1 second and fix this chart. We were looking at the wrong chart, and it looks so similar that that was a common thing. Okay, we're looking at the pound dollar. Apologies, we did have the wrong chart up, but this is the pound dollar chart. As you can see, the movement on the last 3 days of trading, actually the last 2 days, was pretty brutal. We saw the pound break out of 3 or 4 levels of resistance in one go and went up to pretty much the top of the channel. I do see opportunities for retrace coming up unless there is continued good news, and I really don't see that happening. There's not a whole lot of agreement as yet out of the UK and the Eurozone as regards some sort of Brexit deal. It looks like there was a lot of hope on Thursday and Friday. I don't see that there's a whole lot of reality behind those hopes, but you never know what's going to happen. So anyway, I would be far more likely to try to trade this down towards the 123 level, which was a little bit above where it started on Thursday and is the top of the Ichimoku cloud. And that is going to give us a pretty good opportunity for about 300, 350 pips in one go. But again, we have to wait and see what actually ends up happening. I may put some triggers in likely spots to trade it up or down, depending on where it breaks out in either direction. So I'll be looking at the charts very closely later tonight and see if we can start catching some of whatever movement may happen this week. Of course, it may go sideways. There's always that option. So I will be placing triggers where they're out of the way. There has to be some sort of big movement underway before we get taken in. And again, apologies for the mix-up with the chart. These things happen now and again. And now back to the USD/JPY. Again, we had the yen weaken significantly last week as well. And this was one of the pairs where that happened, going back up to prior levels of resistance. And this is another one where we're probably going to have a good opportunity to trade it back down. I would say that the yen is more sideways than anything else right now, but it's still going to be in a channel, a sideways channel, that's about 200 pips wide. So, and it is at the top of that channel. I'll probably be adding that channel to the chart pretty soon once it confirms itself with another bounce towards the bottom. And of course, it can always go all the way to the bottom of the chart. But trading safely, we're going to wait for a good opportunity to trade it in either direction. USD Canadian, this was one of the big movers of the week as well. And again, that's a pretty common pattern. We see that Thursday and Friday, some of these currencies really woke up and made some drastic moves. In this case, however, we were already well positioned. We had been trading an expected bounce from the top of that channel from the resistance at the 133.50. We'd already gotten into a short on that trade on the long-term account. And I think we're carrying upwards of 200 pips right now of open profit on that trade. And of course, we also caught a lot of that move on the short-term account where we traded 3 different Canadian crosses after their fundy on Friday. So all in all, the Canadian gave us most of the profit or most of the recovery, if you want to look at it that way, last week, as it undid some of the damage from the other trades that we were in. So we'll continue riding that USD CAD as far as it wants to go. I don't think I've started protecting profit on that long-term trade, but I'll take a look at it and see if we start protecting some of it. It has crossed the Ichimoku cloud, so that is definitely a good thing. And of course, when it does a cross, there's always a higher likelihood of it actually continuing to move in that direction. So I don't want to trail it too closely. I want to give it room to move. But of course, I also want to capture profit. So the two things will be balancing each other out, and I'll see where we move that stop loss to. USD Swiss, this one didn't move a whole lot, which to me is odd. So we saw that USD JPY and USD CAD moved significantly, and they moved in opposite directions. USD CAD moved into a dollar weakness kind of direction, whereas USD JPY moved into dollar strength. So the USD, the dollar itself, is sort of moving in both directions depending on which currency you look at. With the Swiss, it didn't move much at all. Yes, the USD Swiss moved slightly up for the week. So in that sense, it was a USD bullish, but it wasn't a huge movement. It never got near the prior level of resistance where we have a trigger already in place to take us in short if it gets that high again at that level, probably around the 1.0020s, right above that red line above current price. So it never got anywhere near that. Also waiting to see if it does move in that direction. I still think that if it goes all the way up there, we definitely want to go short and see how far we can write it down, because that does seem to be a very strong level of resistance. Aussie dollar also moved contrarian to some of the other movements. We saw this one move into dollar weakness. So the Aussie won out, but again, not by much, went up to the bottom of the Ichimoku cloud, neatly bounced off of that, and is still very close to the bottom of the chart. So this chart is still bearish to the extreme, but we have to wait for a good opportunity, probably on the short term, to make some gains here. We also have an intermediate term trade open, going short on this one, if I'm not mistaken, and it's probably not carrying too much loss or profit, but I'll take a look. But anyway, this one may this one may give us some good opportunities to trade it towards the bottom, and they'll likely be short term. There's about 100 pips from where it is right now to the bottom of the chart. Kiwi dollar, we do have an open trade, that much I'm sure of, on the intermediate term. We are trading it down. As we can see, it is finding some nice resistance where it's at. So this is just a case of waiting for it to fulfill. It doesn't seem to have the strength to break out of that current level of resistance around the 0.633, which is where it's at right now. So another one under observation, but with an open trade in the mix. Aussie Canadian, all the Canadian trades moved into Canadian strength on Friday. This one was no exception. So it had gone all the way to the outer trend and neatly bounced off of that on Friday, and is now back to, I would say, the bottommost level of its very narrow sideways range of the past week or two. And I still think it has a good opportunity of going all the way back to the bottom. We'll see. Open trade on this one as well, by the way. Euro Swiss, one of our Euro losers. It did take us out when it spiked on Thursday and Friday, went all the way beyond the trend line and almost hit that next level of resistance. So we're out of that trade. Not sure which way I'm going to trade it. I'll have to wait to see which way it bounces, but this is one I'm keeping an eye on. Euro pound, of course, all the pound pairs moved significantly last week. We missed this one, unfortunately, and it was a pretty steep movement, but one I really don't trust so much. It hit the next to last level of support, bounced off of that. I am keeping all the pound pairs under observation as the week kicks off to see if we have any opportunities to trade it back to the previous levels. So more on that to come as the week evolves. Euro JPY, a euro pair, a yen pair, that worked to just take it to all the way back up to the trend line, which was, of course, always a risk on that trade. This is one of the ones that took us out at a loss. And again, now that it's hit that trend line and bounced, we'll be keeping an eye on this one as well for opportunities. All the euro pairs and all the pound pairs are now under close observation to see if we can pick up some retracement pips if they go down to the prior levels, or back to the prior levels, I should say. Euro CAD, again, CAD pair. So we did take profit on the short term on this one, and we also have an open trade on the intermediate, trying to trade it back down to the prior lows. No change to that. It looks like resistance held very nicely in the middle of the Ichimoku cloud, and it is now once again moving in our direction. The CAD trades on the intermediate are not carrying profit as yet, but they are very close to break even, and again, moving in the right direction. So we'll see how that pans out. I think this one is actually carrying profit, but not a whole lot. EuroCAD might be the one that is carrying a little bit of profit right now. Pound JPY, also a breakout as the pound spiked, and also a pair under scrutiny for any opportunities to trade it back down towards the Ichimoku cloud or some of those lower levels of support. Again, very event driven. We have to pay attention to the news cycle and see what's going on with Brexit before we jump into these trades. These will not be determined by technical. The fact that it bounces off a trend line or support or resistance means nothing if a deal is brokered between the European Union and the UK before their deadline of the end of the month, or if an extension is requested and granted, or an election happens, or Brexit is simply taken off the table. There's too many things that could happen that would either strengthen the pound or weaken the pound. So we have to be very, very cognizant of the news cycle before we trade the pound pair. So I'll be keeping a close eye on that. Aussie JPY, also a breakout towards the top. It broke the trend line, hit the prior level of resistance, bounced off of that. Nice opportunity there to make those pips on the way down if it does turn around. So we'll have to be looking at both the Aussie and the yen to see when we can jump back in, and being mindful that we have two significant fundamental announcements out of Australia this week. Their RBA meeting minutes on Monday, tomorrow, and the employment numbers on Wednesday, if I'm not mistaken. So have to keep those in view, because they may move the needle far more than anything technical. So more on that to come. Euro New Zealand, we've got an open trade on the long-term account, trying to trade it back down to as far down as it wants to go. The level of resistance at the top of the chart seems strong enough that we have placed our stop loss above it. And so far that has been panning out. The move hasn't started. We needed to break that trend line, break out of that channel, hopefully go into the cloud and break through the cloud. But the risk here is very low given how strong that level of resistance is. So we'll continue carrying that trade. Obviously, too soon to tell what's going to happen, but still looking good. Pound Canadian, oddly enough, seeing that the CAD strengthened significantly over the week, this one still broke out and is probably the prime candidate for a retracement if the CAD continues to gain strength. So this one is top of the deck for a retracement play as the week begins. And second would be the pound Swiss. Also not a whole lot of negative movement out of the Swiss, as we could see looking at it against the dollar. But for whatever reason, this one still spiked significantly. And again, may be giving us the better opportunity to trade it back down, assuming that we do have a movement in that direction. Again, we're not going to jump the gun. We got to be pretty careful with the news cycle coming out of the UK, but the pound CAD and the pound Swiss are probably your better pound pairs to trade in either direction, really. But my preference is for a short, if that's the way it pans out. That's the end of the charts. Setups we see in progress. Obviously, the pound had that massive spike late last week. And as I've been saying throughout the charts, we want to watch it closely for a retrace. That's going to be my bias, or, you know, a continuation. If it does want to continue going into pound strength, who am I to argue with it? We'll trade it in either direction, but I would be a lot more comfortable trading it back down. The dollar is very erratic right now, with a lot of political and economic uncertainty here in the U.S. We've got Trump facing impeachment deliberations out of Congress. We've got the whole situation he created single-handedly with the Kurds in Turkey, which everyone is understandably upset about. We've got the trade wars with China. We've got signs of economic weakness in the U.S. that haven't been seen since back in 2008. So there's a lot of things weighing against the dollar. And the fact that the dollar hasn't weakened more than it has is pretty surprising. So the dollar pairs bear watching very closely. If we can catch one of those movements into dollar weakness that are going to come eventually, they will also be providing huge opportunities. Right now we're in a time of really big opportunities across multiple currencies, and this doesn't happen often. The Forex market is, as I tell people, it's a place where you're bored 90% out of the time, 90% of the time. And the other 10%, you're in hyperactive, adrenaline-driven, emergency, everything's going crazy time. So there is no in between. You're either bored out of your mind or in heart attack mode. And when all these opportunities are coming, it's a precursor to the heart attack mode, but this is going to be a good heart attack. It's a heart attack that's going to make you stronger. So pay attention. These times of opportunity don't come around every month, every week, not even every year. So we have to take advantage of them when they do come. The Canadian pairs, as I mentioned, the CAD moved sharply against the dollar late last week, moved sharply against a lot of other currencies, but to a lesser degree. And it is going to be a good week for the CAD as it bounces off of the labor report it had last week. Hopefully that strength movement continues. So we will be holding on to our open CAD trades, but watching very closely to see what happens. Japanese, the yen is still holding on to its gains, but it is showing more and more strength. We've seen retracements on several of the yen pairs. Nothing that would tell us a reversal is happening just yet, but it's certainly not looking as good as it was looking a couple of months back. So take that with a grain of salt. It could still go either way, but it is showing a lot more stress than it had in quite a while. And of course, the euro is sliding more and more. It did gain some ground last week from quite a few currencies, but not to a significant degree. I mean, the spikes looked a little bit excessive simply because we hadn't seen anything like it in a while. But I don't know. I don't see that trend continuing. I'm far more confident that it will go back to the prior trend. And that is the end of our review for this week. My final words here in conclusion and in mindset. I try to pick something that's top of my my mind at the time I'm doing this deck. And I was reminded, because of a conversation I had earlier, that one of my main points of contention with a former business partner was because of something I wrote in my first book. And that was to the point that not everyone had the ability to trade. I said quite clearly in that book that I just couldn't teach everyone because not everybody had it in them. And he took a lot of offense or exception to that and suggested that I take it out of the book. And I said, no, I'm not going to take it out because I firmly believe in it. Not everybody can trade. If you don't have the right mindset, you're going to fail. And I still stand by that statement. You can never be who you're not. And if you can't trade, all isn't lost. You can copy somebody who can trade. But even then, there are pitfalls. I've seen people using the copy trader, and I'm making profit and they're not. Why? Because they're second guessing some of the trades. They decided they didn't like this one, so they'll take it out. And that one turned out to be the big winner of the week. So they kept the losers, got rid of the winner. If you're going to copy trade, you got to leave it alone. Whether I make money or lose money, if you decide at some point that I'm not making money, we'll obviously stop using the copy trader, but don't second guess it. And of course, the better option is to learn how to trade so you can do it for yourself. But if you don't have the right psychology to do it, you're going to become your own worst enemy. Last week is a perfect case as an example. We had a losing week. These things happen. But if you suddenly start doing things differently because you're losing, or even start doing things differently because you're winning, long term, you are not going to succeed. You have to have a plan. You have to trade your plan. You have to leave your trades alone and follow that plan. You cannot let yourself get in the way of your trading, or it's simply not going to work out. So knowing yourself is probably the best advice any trader can have, or any trader can be given, is to know who you are and trade accordingly. And if you don't have the psychology that's going to allow you to take a losing week in stride and just keep doing what you've been doing, that's been working out all the time, except, for this 1 week, then you're not going to succeed long term. And it's better that you let somebody else do it for you, or simply decide that trading is not your cup of tea. There's no shame in that. We're not always going to be good at everything we do. And the shame is in pretending that we can do something that we can't. So those are my parting words for the week. Any comments or questions from anyone before we drop off? Okay, then I will see you guys tomorrow. Again, we're going to have, even though it's a holiday, we're going to have a session tomorrow for the Australian RBA meeting minutes. I will clarify what time that's going to be happening in the email that will go out as a summary of this start of the week. Thanks very much. Talk to you guys tomorrow.